Greetings, members, one and all of the Salivation Nation. Gold and silver recovery. And Palladium is back on top. Let's take a look. These are the numbers for today on December the 16th, 2021. Gold, silver, platinum, and palladium are all up. Everything is in the green. Pretty amazing to see what has happened in just a few days here. The turnaround in precious metals. Although it is still disappointing to see the gold to silver ratio still at 80-1 for those of you silver bugs out there. But silver did outperform gold in its gains today. But look what's on top, Palladium. We'll explore that later, but let's talk a little bit about what happened here today with the markets. Gold price is at near session highs following disappointing flash PMI data. This is from Kidco News. The gold market is seeing some new buying momentum as U.S. economic data continues to disappoint as preliminary estimates show slowing activity in both the manufacturing and service sectors. Thursday, IHS Markit said its flash U.S. Manufacturing Purchase Managers Index for December dropped to a reading of 57.8, down from November's reading at 58.3. Economists were expecting to see activity increase, with the index rising to 58.6. The report said that activity in the manufacturing sector is at a one-year low. Meanwhile, momentum in this service sector also appears to be slowing. The report said that the flash PMI for the service sector dropped to a reading of 57.5, down from November's reading of 58. Economists were expecting the activity to increase to 58.9. So it said that the sentiment of the sector is at a 3-month low. The gold market is trading near session highs following the latest economic data. And so it just goes to show you how many different things can weigh in here. We're not even talking about the housing market, because in some areas of the country that is down as well. And housing markets data certainly would be an indicator of a potential decreased economic activity. You know, we are seeing a lot of different things play against each other, but we live in weird times for sure. In fact, you know, consumer prices or consumer activity is up, and GDP probably will be up, and unemployment is low, you know, at a near 50-year low. What gives? Why is this happening? Well, because of inflation. Again, as I mentioned before, I've not really heard this mentioned any place else. Well, why is there all this economic activity? Why are people buying things now? Well, because they're afraid of what they're going to cost in the future. And I'm not just talking about 2 years from now. I'm talking about next freaking month. That's the thing. I think that's what is causing a lot of this activity, and why certain economic numbers seem high and other information such as manufacturing sector is at a one-year low. And maybe even housing, maybe, you know, those prices certainly have gone up big time, and it's already probably out of reach for some people. And so they're focusing on staying where they're at and buying things that aren't going to, that they're going to have that will potentially go up in the future, very near future here. So February gold futures last traded at $1,793.10 an ounce, which is up 1.61% on the day as the time this article was written. Chris Williamson, chief business economist at IHS Markit, said that although the headline numbers were disappointing, the data still points to a resilient economy faced with new threats from the COVID-19 pandemic. Business growth slipped only slightly during the month and held up especially well in the vulnerable service sector. Manufacturing output growth even picked up slightly amid a marked easing in the number of supply chain delays, which also helped to take pressure off raw material prices. Barring the initial price slide seen in the start of the pandemic, December saw the steepest fall in factory input price inflation, for nearly a decade, he said. So that is interesting to see. Although pressures in the manufacturing sector have eased, Williamson said that the service sector is still a growing concern. The worry is that rising wage growth, greater transport costs, and higher energy prices have pushed service sector cost inflation to a new high, and that any renewed disruption to global supply lines resulting from the Omicron wave could lead to renewed upward pressure on goods prices. However, I think most agree now that the Omicron variant is a weaker strain, though more contagious. It's a weaker strain, and more than likely, vaccines and the like are out there, and so some people obviously feel that those are going to help minimize any severity, even though it's less severe, keeping people out of work. But who knows? But that's people have different thoughts about that and about the vaccines. I'll leave that debate out of this discussion because this is mainly about the precious metals prices, kind of where things are going and what affects those. There's another article in Kitco from Jim Wyckoff about these solid gains post the FOMC meeting, and the metals market traders on this day are reckoning that rising inflation prospects are bullish, as shown by market history. A new lower U.S. dollar index today is also friendly for the metals bulls. So you have the numbers that I talked about earlier about manufacturing, and the dollar index is down. So that's going to prove positive for gold. Safe haven metals are rallying despite upbeat trader investor risk appetite late this week. Trading in the metals markets this week is a prime example of the old trading adage, markets can remain illogical longer than traders can remain solvent. It's actually a very good trading, and illogical essentially means that it is very emotional and volatile. February gold, and we'll talk about the prices later. We'll look at those in a moment. Global stock markets were mostly up in overnight trading. U.S. stock indexes are pointed towards solid higher openings than the New York day session, and we're seeing kind of things where they are at. Traders and investors Thursday are still digesting the U.S. Federal Reserve FOMC meeting results. The FOMC statement somewhat surprisingly said 3 interest rate increases are likely next year, and that U.S. inflation is rising, but suggested it will back off in the coming months. Could that be translated as transitory? I don't know. Are they reversing their position again? One could make an inference that might be the case. The FOMC is accelerating its monthly asset purchasing tapering, which will end in March. The marketplace correctly expected a hawkish lean from the FOMC, but the better clarity on timing and actions of the Fed appeared to assuage traders of many markets, as evidenced by the rally in U.S. stock indexes, stable bond yields, and a weaker U.S. dollar index. The marketplace is awaiting the results of the European Central Bank and Bank of England's monetary policy meetings. The BOE just announced it's raising its main interest rate by 15 basis points. So the Bank of England is already starting its rate hikes. The pandemic never seems to stray too far from the front burner of the marketplace, and the lockdown mentality turning London into a ghost town is starting to feel like the real thing as Europe resurrects stiff border controls, and another Christmas looks to be lost to the virus, according to Bloomberg's report today. And so we'll see how things go in that regard. But looking back here again at the precious metal prices, we do see gold up fairly strong. In the ask price, it is almost $1,800 an ounce again. Only $1 worth of difference between bid and ask. Up over $20, up almost 1.2%. Silver, up almost 40 cents there. Almost a 1.75% increase for silver today. Solidly above $22. It got a little scary at 21. I think that was our low. I could be wrong, but I don't think we're going to see below $20 silver. Still unlikely that we'll see $30 silver by the end of the year. We're literally less than half a month away. Boy, it'd be nice if I was right for once. We'll see. Likely, unlikely to happen. Likely that it's unlikely that it will happen. Platinum is up $20. That's a 2% increase. Still below $950. But Palladium is where all the action is today. Almost 8.5% increase, up 129 bucks. In the ask price, it has surpassed gold again, but in the bid price, it is still below gold. That is an interesting measure there. Hundreds of dollars worth of difference between the two metals, between the two price points, bid and ask. And rhodium is not doing anything today, but it's still way up there. But it's half of what its all-time high was. Almost $30,000 is what rhodium got to. But palladium making a very strong comeback here in the markets today. And volatile metal, but more than likely seeing potential, maybe more manufacturing happening with automobiles. We'll see how that plays out, but it is something to see. Almost $130 there for palladium. And of course, you know, the volatility in the mining sector there. Palladium is actually more rare than platinum and not as dense in a physical sense, but there it is. There's where the numbers are today, with the winner being palladium back up on top. And what are your thoughts about the markets today? It is kind of a roller coaster ride, but we have a little bit of a recovery here, and we'll see if this continues in the coming days as we head into the holidays. This has not been your normal holiday season for sure. We have seen prices come down, and usually we do see that at the end of the year. But there's been some pretty dramatic drops, I would say, especially considering all of the uncertainty and volatility of the entire global economy. And there's other factors that we talked about where the prices kind of move based off of something that's not normally talked about, you know, the PMI there. So there you have it. Let me know what your thoughts are. I'd like to extend a multitude of gratitude to you all for taking the time to watch. And if you made it this far, type in the comment section below 1 year low right there. Let me know that you were here, and I appreciate you all so much, and a multitude of gratitude. And I will encourage you to please rate, share, and subscribe for a 1 year low.